Great. Well, thank you so much, everyone, for being here. If you're watching this recording, thank you as well. I am very excited to share with you guys everything that we're gonna talk about today. It is so exciting to think about taxes, right? It is super exciting to think about taxes, to even imagine like it is. Oh, it is already mid-October. Like tax deadline was yesterday. So for 2023, most business owners, most people that are entrepreneurs usually get tax extensions because they have to pay. So they just want to drag it, the longest possible. But when we think about, it's like, okay, we have less than 3 months for 2024, and then we enter a new tax season. We enter a brand new tax season, and that tax season is gonna be 2024. Well, the goal of sharing this information with you guys is that I really want you guys to have the blueprints of what it takes to actually earn $1 million. I wish I had a mentor or a coach that had told me, Esmeralda, this is the best way that you can do if you want to earn 1 million. Like if you guys don't want to earn 1 million, it's fine. I mean, if you want to earn 250, 500, 750, whatever amount, it's completely fine. But the reality is that the more money that we make, the more money that we earn, if we don't understand taxes, if we don't understand the laws with money, not everything is going to stay on the bank account. Like most of it goes on expenses, it goes off to taxes, and the goal here is to share the shortcuts and the strategies so you guys can pay as little as possible legally, and that you guys are able to build this empire, because at the end of the day we all need money. Why are we working? We are working for money, and if we don't have a plan for our money, we're gonna keep on working for the rest of our lives. We need to be able to have a plan for our money. Money is one of those thoughts or those conversations that are uncomfortable, usually with our parents or with people that are not really happy with their finances. It's very challenging to talk about money. And the first thing that I invite everybody is to feel comfortable with, sorry, let me mute everybody. Here we go. To feel comfortable talking about money. There's nothing wrong on thinking that you want to become a millionaire. There's nothing wrong with that. The way that business is run right now, it's not the same way that it was run 10 years ago or 15 years ago. If you, and remember this, if you're working for somebody else, there's nothing wrong. My mentors, my bigger mentors, the mentors that I have, my teachers that I have that have successful companies, they all started working for somebody else. They started working for somebody else, and they started their side hustle, their side business on the side. And they were hungry. They were not comfortable. They were hungry. Hungry for what? For the independence. I don't care if you're 15, if you're 20, if you're 25, if you're 30, whatever age you are right now, I really want you to think about the future. Let's think about it. It's already the end of 2024. If you don't start having a plan for the money that you earn right now, you're going to look back and you're going to be what, 50, 40, 60, and then what are you going to have for your financial freedom? For me, becoming a millionaire, it means that you are free, that you don't depend on nobody, that you're able to pay somebody if you need help going to the bathroom when you get old. Like you're not depending on anybody. Being able to be financially free, it means that you need to start planning now. I don't care how old you are right now, even if you're 17 or if you're 15, you got to start having a plan now. And that's one of the biggest obstacles, mental obstacles that we have, that we just don't see how we can make it happen. And because we don't see how we're gonna make it happen, we just don't plan. So there's two ways that you guys can earn money. You can trade your time for money, which is what most of us do right now, or you create something of value that you sell in the marketplace and you get compensated for whatever it is that you're sharing to the marketplace. The biggest challenge is going to be to have the mindset that whatever it is that you're doing right now, you gotta be able to think of how you can help more people. How can you bring more value? And when I say that, it's about being able to share the skills and whatever it is that you do, whatever it is that you know, to the marketplace. So I'm gonna use Avelino for example. Avelino, are you here?
Yes, I'm here. I'm
Can you
here.
turn on your camera, please?
Oh, okay.
Thank you. Oh, hey, Georgie. Nice to see you guys. Okay, so we're gonna use Avelino's example for today, okay? Avelino is a full-time student and he is a real estate agent. He's hustling on his business because he's not an employee, okay? And we're also gonna use Georgie's example because he is an employee right now. So we're gonna use these two handsome models so we can talk about numbers. Because at the end of the day, why are we here for? We're here for results. We are here for results. I really want you guys to live today understanding money and realizing that I don't care how old you are right now, you gotta start having a plan for your money. And I invite you to start being hungry on being financially independent. I don't want you guys to be comfortable. The worst thing that could happen to a human being is being comfortable. If you're comfortable, you're not growing. Only when you're uncomfortable, that's when you start to grow and see different things. And when it comes down to money, you gotta be uncomfortable because it's already a topic that it's not easy to talk about. Okay, so let's talk about money. So let's talk about Avelino first. Okay, so he is trading his time for money. He's a real estate agent. He is not an employee, so he does not get his taxes deducted from his pay. There's two ways that we get paid. We get paid as an employee or we get paid as an independent contractor, business owner, self-employed. There's only two ways. People who are employees, you're working for somebody else, you earn, you pay, and then you spend. Georgie, say that again.
You earn, you pay, then you spend.
What do I mean by that?
That you need to earn the money first, then you pay whatever you have to pay, going with the business, and then you can spend. Wait, what is it?
You're having the right
Right.
train of thought. So
Yeah.
you're going good.
You pay, you earn, and you
Taxes.
spend. Okay, there, I got it.
There you go. As an employee, you earn, you pay your taxes, and whatever is left, you spend. My husband and I did not earn our first $1 million being employees. You can definitely do it. You can work really, really, really hard and pay a lot of taxes if you want to go for it. But the way to earn $1 million, 500,000, 750, it's not by being an employee. Because the more you work, the more hours you put in, what happens to your paycheck? What happens to your tax rate? It goes up. So what happens when you work overtime?
What?
They take more money from you.
They take more money from you. Okay, now let's talk about Avelino's case. Avelino earn, Avelino spend, and then Avelino pays. Let's say that one more time. He earns, he spends, and then he pays. And guess what? He gets to choose how much he's paying legally. Okay? If you guys are employees right now, if you guys are working for somebody else, or you're gonna start on the workplace, there's nothing wrong with being an employee or working for somebody else. But I really want you guys to get this idea that in order to be financially independent, because the bodies that we have or health, it's not guaranteed forever, and it's not gonna be always where it is right now if we're not taking care of it. So if you're working for somebody else, the more you work, the more they're gonna take taxes from you. And when you file your taxes, you don't get to deduct anything. You don't have a lot of options. So with Avelino, he earns his money tax-free. He doesn't have to pay. He spends whatever he has to spend. And at the end of the year, he files his taxes and he's able to deduct a lot of expenses that he had with his business. And that's what we're going to talk about today. If you work for somebody else, it's wonderful, but I really invite you, and I will love you to consider having something on the side for yourself, because it is going to be a lot of work, yes, but let's think about it. If you're 25 and you hustle for 20 years, at age 45, you're going to be completely free. If you're 20, by 40, you're going to be done. You're going to be able to chill. But we have to freaking pay the price. Like, we gotta hustle. And that means being uncomfortable, not going to parties, not going here, like actually being hungry to learn and actually do something else. Okay? So there's the two key differences. An employee earns, pays, and then spends. A business owner, an entrepreneur, a self-employed earns, spends, and then pays. Okay? Before I continue with this, I want to show you guys this table, and we're going to use Avelino's example. So Avelino, right now, what happens if you don't go to work? What happens if you just don't go to work? What happens to your income?
Well, it stays the same.
Huh?
It stays the same.
What do you mean stays the same? You don't earn anything. If you're not working, you're not getting any money. You don't get anything. Okay.
That's what I'm saying, yeah.
Everything that you have learned so far in real estate, all the knowledge that you have in real estate right now, it's on your head, right? It's on you because you have that knowledge and you have that experience of the stuff that you have learned on real estate. Correct?
Well, I don't understand what the question is.
I haven't asked you the question yet.
Oh, okay, yeah.
I'm just telling you.
Okay,
Everything
yeah.
that you know, you
I
always
learned,
have
yes.
it. Nobody else knows it, right? Just you.
Well, no, not just me, no. There's other people that know it.
I'm talking about in general the marketplace. Whatever experience you learn on, let's talk about the last commercial deal that you're working with. You have learned a lot on that commercial deal, right? And the stuff that you have learned, you know it, I know it, and your partners know it, right? It's a small circle of people that knows what you learned in this last deal.
Yes, yes.
Okay. If you're working for money and you're not building a money machine on the side, or you're not having an extra stream of income, all the knowledge that you have, you only have it. When we're talking about building a business is a system that works without you being there. A business is a system that it works day and night and it's making you money, but it requires your time at the beginning like a baby so you can create the system and you can create the processes so it can work for you. So let's think about Avelino creating a program for small business owners that want to buy commercial real estate, and that you're going to teach them, okay, don't do this, or this is how you do things. And you put that program in the market, or you create a blog, or you create a book, or you create something digitally, because right now everything is digital, and you get that going. You're able to serve more people, you're able to help more people than just the people that you're working with, and you're able to make more income. You're able to earn more. Is that right? So as you're going through your career, you could either focus only on serving your clients and trading your time for money, or you can start building a money machine from the experience that you have and service and provide that into the masses. Am I making sense? Okay. Again, you can either just work, trade your time for money, or start documenting all the knowledge that you have and find a way to add value to a lot of people and sell that information to the masses and earn more money without you having to trade time for money. Alondra, are you here?
Hi, yes, I am.
Hi, gorgeous.
Hi.
What did you just understand of what I said?
Have a side hustle.
Okay, so we're gonna be using Avelino's example. So tell me, like, what did you understand of what I just explained him, or what he can do?
Well, either he could work for somebody else and make a
Well, he's gonna continue working. He's gonna continue working. Right now, he's hustling. He's working 7 days a week. Like, he's on it. He's hustling. But right now, he's trading time for money. He's trading time for money, which there's nothing wrong with it. But if he wants to be ahead of the game and really multitask and bring a lot more value to more people with the stuff that he knows, even you, girl, you like know a lot of stuff about commercial real estate right now, the most business owners. Wouldn't you agree? There's a lot of stuff that you know that people that have businesses have no idea, because you went through that process of learning. You're learning, but we're not doing anything else with what we're doing. We're just keeping it and using it as a robot to work and produce more money just from our time, right? So if Avelino's working right now, but if he's smart enough to say, okay, I don't be working like all the time like this, I'm gonna start documenting everything that I know, and I'm gonna sell it to the marketplace. He can have a different straight of income without him having to trade his time for money. Does that make sense?
Yes. Kind of like what you're doing, right?
What am I doing? I don't know.
Well,
Tell me, what am I doing?
you know.
Well, let's stick to Avelino then, because I know we're doing a lot of stuff. But our focus today is him. So let's talk about him. So let's tell me, what can he do right now? And I'm gonna put this on this slide right now, because this is what I wanna focus on, that we talked in our previous class. Here are a few ways to earn $1 million. Alondra, I need you to stay with me. So look at this table. Look at this table and give me one idea that Avelino can start doing now to have different straight of income, a separate straight of income, where he can earn $1 million with that knowledge that he has right now.
Okay. Let me see. Well, I'm trying to think because he's into like real estate and stuff, so but I'm also like comparing him to you a little bit because of what he knows. It's very similar to what you know.
Okay.
So maybe like 2,000 people pay $42 per month for 12 months for I don't know, maybe like a guide or something.
You're thinking. I love that. So if Avelino creates something and he sells it for $42, just $42, and he gets to sell it to 2,000 people for 12 months that they pay a subscription or a membership for $42 a month, and he gives all these knowledge and everything he knows, he earns an extra $1 million. An extra on the side, just $1 million, like good, just extra pocket money. Is that what you're saying?
Yeah.
Okay, now let's talk about you. What can you do now? What can you do now? You're working with me, you're learning a lot of stuff, you're learning stuff from school. I don't want you to wait until you graduate to have it. Life, it's not gonna be, we're not gonna figure it out. Life, it's not like that. There's gonna be no point in your life where, oh, I gotta figure it out. No, I'm sorry. Your parents, like my parents, me, we don't have it figured out because life, it's about continued growth. So I don't want you to wait until you graduate to say, that's what I'm gonna start with life. No, you gotta start now, thinking how you can add value to other people based on what you're learning and get compensated for it. What can you do now? Instead of like, oh, I'm gonna just get a job. No, don't think about getting a job. Think, what can you do? What do you have of value that you can bring to the marketplace right now?
Oh, that is a good question.
And you have the answer.
Based
Look at
on
the
like, are you saying,
look at the table. Like this is,
are
you
you
told
saying
me the
based off
first
the table?
yeah.
Well, right now I'm thinking about the first one, but I don't like about the 20 years. I don't like the 20 years.
Good, good. I'm glad that you don't like it.
But then also I feel like for me right now, a salary of 250K is kind of a lot.
So let's keep going down.
Earn $114 per hour every hour of the year. That also doesn't seem very
Okay.
reasonable for me. So I don't know. Looking at these, oh, maybe the 5,000 people will pay $17 per month for 12 months.
Okay, I love that you're going there. Okay, what can you bring of value that you can charge $17 a month? What can you give 5,000 people? What value can you bring to the lives of 5,000 people that you can charge $17 a month? That people will be willing to pay you that amount.
Are you saying like think of something or just or like that I would make
Whatever you think.
or
It's whatever you're thinking. This is a case study, guys. The most difficult the biggest challenge is getting over our head because we're not used to think. Okay, we're not used on thinking. We are used to just reacting of what we know. And what I'm doing right now with Alondra, I'm pretty much doing it with everybody. I want everybody to think. I just want you guys to think outside the box, be uncomfortable. This is uncomfortable. This is recorded. Everybody's here. And Alondra's like, oh, why? Well, that's how we grow. Like, you guys are interested in doing something for your lives. That's why you're here. So my whole goal is make you guys think. So Alondra, I'm gonna have Avelino help you. Avelino, what can you do right now? What can you bring of value to the marketplace right now where you can have a separate stream of income, but at the same time you bring value to the marketplace with what you have right now to offer?
Let's see here. Are we talking about what exactly are we talking about? Like the 5,000, the 2,000, the 1,000?
Whichever you want to talk about.
Well, I mean, if we're going to 5,000, I'd probably go the $5,000 people route for $17. Because I don't have much time. Like I don't have much time to invest a lot of time into the site because I'm doing school and real estate. But I think what I can do is teach people how to like write a contract, something as simple as that.
Okay. What else?
I could teach first-time home buyers how to read a contract.
Ooh, fancy. And how would you do it? So what will be the first step that you will do it?
What do you mean?
Yeah, so teach first-time home buyers how to buy a house or whatever. How would you do it? Knowing the tools that you know about the digital world right now, how would you do it? Where would you do it?
Where would I do it? That's an amazing question. There's a lot of platforms that offer you multiple, I don't know. I mean, the easiest would be like just market it on Instagram and do like a Zoom meeting.
What's another way?
My mind's blanking. I could just make like a group, like an individual group, like on Facebook or something. I don't know.
Nice, nice. I like that you're thinking. Now, Georgie, you heard Alondra, you heard Avelino. What can you do? What can you give us of value that you can charge for?
I don't really have much value right now.
You have a lot of value.
I have no idea.
Yeah.
Honestly, I've been thinking of what I could do. It just nothing comes to mind right now. I mean,
What do you do? What do you do to the guys at the ranch?
But we're talking about, don't watch this. We're not talking about trading time. We're not talking about trading time. We're talking about creating something that's going to bring you a recurring revenue that you don't have to be trading your time to get paid. Right now, Avelino, you're trading your time. You're trading your time to get clients and to represent them. We're talking about creating something that you're bringing value, but you're not trading time for money.
Okay. Well, with doing the contracts, I would be trading time for money.
If you decide to do classes, but if you record classes and you just sell a package of classes, you don't have to be trading your time for money.
All right, my bad.
That's a tough question.
Georgie, our biggest enemy is always gonna be ourselves. And the more we say to ourselves that we don't know something, the more we're gonna blank out and we're not gonna get options. I told you guys I was gonna pick on all of you three, because I have you guys close. So and I want you guys to be super successful. That's why I'm picking on you. You're so uncomfortable right now, but you're getting comfortable being uncomfortable. You're getting used to it. So that's really good. So the fact that you said, yes, I have value to offer, that's the first step. Like, let me think. Yes, I know a lot of stuff. I know soccer, I know this, I know that. I mean, there's a lot of stuff that I know. Hey, you even you do a trucking business and you know why it works and why it doesn't work and what could be done. You know how many people want to start trucking business and have no idea? And if you're able to tell them, hey, don't do this or do this or expect this, like even saying freaking expect this, because at the beginning, you don't know, we don't know when we start, but this is what happens on the first couple of months. Be ready before you start.
Yeah. I did have that in my mind, but I don't know. I mean, not that I can't say I don't know. Um, it was just hard. So it was kind of like I didn't even know what to do, you know? So it's like, how am I gonna go tell people like this and this and this and this? But I didn't have the guidance to do that.
Yeah, yeah.
Yeah.
The fact is that you have experience behind you. Everybody has some kind of experience. Everybody has some kind of experience that if we share it to the public, that's how people make a lot of money, a lot of money. So the reason why I share this table, it's because in order to be able to make a goal of how much money you want to earn, you got to be clear on your numbers. My amazing coach Tony always says that we cannot control what we don't measure, and we need to have those numbers to be able to know what we're working for. It's like when you're building a house, you got to have the blueprint and then figure it out as you go, but you already have the blueprint. This is exactly why I'm sharing it, my beautiful Ali, because I want you guys to have the number on your head, to have the goal that you're going to hit, and then see how you can bring value. Like $278 a month, what kind of package, what kind of value can you bring to the marketplace, to your clients, using the digital world, but also understanding that you don't have to be trading, because right now you're trading time for money. You're doing it at work and you're doing it at the business. But as you're building the business, you don't have to wait until everything is perfect to create a plan to have a straight of income where you're no longer trading time for money. Does that make sense?
Yeah, and I mean that's definitely the end goal. So,
And that has to be built in the business plan. You guys, we gotta think on paper. We need to have a business plan. Even if you don't have a business right now, if you're going to school, you gotta have a business plan for your life on how you're gonna be earning money. We need to have that plan, and we gotta build it in. If you know you don't want to be trading your time for money. Thank you, Ali, for sharing that. Okay, so the next thing that I want to cover with you guys today is the taxes. Yay, so exciting. Avelino, we're going to be using your example again. I don't know why you turn off the camera, but I need your camera on. Okay, great. So 2024, you earn a lot of money in 2024, and you got to figure it out how you're going to report your taxes in 2025. Okay. When
Right.
you are self-employed, when you don't have a boss, when you don't have payroll, you got to file your taxes on your own as self-employed. Okay. If you have an employer, if you're working for somebody else, you do have this form called 1040, which is the standard form to file your taxes. You're self-employed or you're employed, it's the same form. We all have it, okay? If we look at the form, on the top, you have your personal information, address, social security. Now, I want you guys to be mindful of checking your paperwork. Don't just go do your taxes without revising the name, the address, the social security, because there are often typos that if you don't check, I can tell you how many clients I have where their address is wrong, their name was spelled wrong, like they have two last names and they only put one last name. Why is this important? Because when you want to buy property, when you want to buy real estate, or when you want to buy investments, there's always gonna be a tax reporting. So the IRS has your records, and if your tax return was sent in incorrectly, you're not gonna be able to buy, you're not gonna be able to do anything until you fix the records on the IRS. So make sure you guys check that your tax return shows your name as it shows on your driver's license, that your address is correct, and that all the spelling is correct. So let's look at this beautiful form. That's called a 1040. The 1040 is your report card, like when you guys were going to school or when you're in school. This is a report card for grown-ups and for adults, okay? Your taxes, whether you got a B, C, or D, or an F, this is how a bank is going to evaluate you. This is how an investor is going to look at you based on the numbers that we have here. We have the option to put the income from a W-2, which is very simple, very self-explanatory. Your W-2 has how much you earn and how much you pay. But when you're self-employed, you're going to have to do the math yourself. You're going to have to do what it's called the bookkeeping, the accounting for the business or for the work that you do if you're self-employed, okay? What is one of the first ways that you can earn, that you can report your income? It's through a Schedule C. Avelino does not have a corporation or an LLC. He's getting paid on his name, okay? Because he's getting paid on his name, he's gonna have to file what is called a Schedule C, as in cat. It's called a profit or loss from business as a sole proprietorship. Okay? Remember that I said that a self-employed or a business owner gets to earn, spends, and then pay, and then can choose how much they want to pay. This is what I'm talking about. So on the top, we have name of proprietorship, Avelino Espinosa. Business name, Avelino Espinosa, real estate agent. How much did he got paid? 100 grand. And then let's talk about what expenses he had. So he earned 100. He had advertising costs. He had car and truck expenses. He had all these expenses that he's able to deduct on the business. So let's say he earned 100,000 and he had 50,000 in expenses. His net is gonna be 50. He's not gonna pay tax on 100. He's gonna pay tax on 50 because he's able to deduct all the expenses that he had that were related to the business. Now, key, when you think about what are you able to deduct or what you're not able to deduct, very simple. If it's business related, you're able to deduct. If it's not business related, you're not able to deduct. Very simple. We don't have to make it complicated. If it's business related, you are able to allocate it here. If it's not business expense, you're not able to allocate it here. So if you work for a company and you earn 100,000, they tax you at the 100,000. If you're self-employed or a business owner and you earn 100,000 and you put all your expenses, you're only taxed at whatever amount is left and not at the gross. Does that make sense? Alan Espinosa, are you here?
Yeah.
I don't see you. I don't see you.
Oh.
Okay. This is a Schedule C. When you're making money on your own and you're not getting paid by anybody else. Okay? Tell me what you understand by what I explained with the example of Avelino.
I can't see what Schedule C says.
It's a profit and loss from business. So if Abelino earned 100,000, he's gonna report the 100,000 here plus what? The expenses. Okay, if you go work for a company and they pay you 100,000, you're gonna pay taxes on 100,000. If you go and become a real estate agent like Avelino and you earn 100,000, you're able to pay taxes on less than the 100,000 because you're able to deduct the expenses. What are expenses? Give me an example of an expense.
Food?
No,
Like, what do you mean?
if it's food a business expense? It could be
Oh,
because
you meant
he
just like
could be
normal
buying-
expenses, like
he
just
could be
food.
buying food for his clients. So yeah, he could be
Oh,
buying food for his
um,
clients. Give me another expense.
like you said for his business.
Mm-hmm.
Like because he does real estate, right? So we're saying real estate.
Uh-huh.
Would gas be one?
Yes, that's good. What
Or
else?
no, he drives a Tesla. Never mind.
Well, it's just gas. Okay, give me another one.
Uh, uh, can I say time?
Not really. Let's talk about Lily. You know, Lily has her business for the dogs, right? So what kind of expenses do you think she has for her business?
She has her own like what's it called? Does she have a van or something?
It's a grooming business, right? Is it grooming? Am I saying it right?
Yes.
Okay. So what kind of expenses do you think she has?
She has to buy like all the things that she needs to clean the dogs and stuff.
Uh-huh. So all the stuff all the supplies that she has, she gets to deduct on the taxes. So from her gross income, she's able to deduct all those expenses. And at the end of the day, she only pays taxes on what's left. So she's able to choose what expenses she's gonna put to deduct the amount that she's gonna pay taxes on. Thank you, Alan. Avelino, why is this so why is this way you're filing your taxes? How does this affect you when you want to buy a house? So let's use the example of Lily for a second. So let's say she's putting all the expenses that she has on her business, but yeah, she wants to buy a house. She wants to do something. Why does it affect her having a gross income and a net income?
So you're asking me why what's the difference?
Why does it affect her to have a low amount of total income versus versus somebody that has a W-2 and just has the full pay that they're getting when it comes down to buy a house, either residential or commercial?
Well, ultimately, when it comes to applying for a loan, the bank looks at the net income, which is, gross minus the expenses. And ultimately that growth, that net income can also be seen almost as like disposable income, which is extra income you have to spend on, let's say, the mortgage. So if you're not making a lot of money net, you're not netting a lot of money, you're not most likely not going to be able to take on that extra expense of that mortgage. So
That's exactly right. Saying it in a simpler way.
Yeah, please, because
Line 31.
I said it as simple as I thought I could.
Saying it on a simpler way, line 31 on your schedule C as in cat is the total income that you're telling the IRS that you keep for yourself through the whole year. So if you don't want to pay a lot in taxes and you leave that you earn $12,000 the whole year, you're telling the IRS that you support yourself with $1,000 a month times 12, it's 12,000. but you have a car, you have this, you have that, you're paying for cell phone, you have all this. That's when self-employed individuals and business owners, entrepreneurs get in trouble, deep trouble, because they don't do the math and they don't do the balance out, because most tax preparers want to save you money and they want to report what's less so you don't pay taxes. But not paying taxes doesn't mean that it's gonna be on the beneficial for you on the long run. Now, talking about Schedule Cs, very simple. LLCs. I want to talk about LLCs. If you create an LLC for your business, the LLC is not recognized at a federal level. The LLC does not exist in the IRS. It only exists at the state level. So when you file an LLC with the state of California, when you file your taxes at the federal level, you have to file it. If you're a single member, meaning you're the only owner of the LLC, you gotta file it as a sole proprietorship, which is a Schedule C. Avelino, if you do an LLC and you're a single member, you're gonna have to go back to file a Schedule C. There's not a different tax form for LLCs at a federal level. If you have a partnership, if you have a partner and you have an LLC, you have to file the form 1065 for partnership, U.S. partnership income. And you're gonna get what it's called a K-1 form when you have partners. But I want you guys to know, and I know these letters are a little small, the expenses that get deducted from a sole proprietorship, an LLC, an S Corp, a C Corp are the same. Your bookkeeping, your accounting is the same. Gross income minus expenses. What expenses? Very simple. It's gotta be business expense. Alan said meals. You are not able to deduct your own meals. You're able to deduct business meals if you buy meals for your clients, for marketing purposes, for prospecting, whatever. But when it comes down to your own personal use, cannot be deducted. It's gotta be business purpose. Does that make sense? The accounting, the bookkeeping, the QuickBooks, which is the system that we use, it's the same across the board. That has nothing to do if you have a C Corp versus an S Corp. Somebody that has an LLC has the same bookkeeping system as somebody that has a C Corp. Target has the same accounting system that a small mom and pop restaurant. You just gotta be able to understand that the expenses that you deduct are the expenses that are related to business. All the money that goes into your account, that's another thing. That not reporting all the money that gets into your account. If you don't get an audit, I mean, you're lucky. But the minute the IRS pick your file and in your bank account, you deposited more. Let's say in Avelino's bank account, he got in this, and I had clients like this. They got 200,000 on their bank account and they only reported 100,000 on the tax return. Trust me, Georgie, I have seen it at all. Like I have seen clients that have over $1 million that only reported 200,000 because the tax preparer, like, they just wanted to save money on taxes, and it's like, let's just report this. But guess what? Money that touch a bank is reported, and sooner or later the IRS is gonna find out. So to recap, the LLC, it's not a form that it's recognized at a federal level. You gotta choose how you're gonna file your taxes. Avelino, I need you to look at the screen. As a sole prop, as a partnership, as a corporation, or as an S corporation, you gotta choose. Is this making sense so far? Avelino?
Yes.
So if you file an LLC and you file a Schedule C as a sole proprietorship, if you earn 100,000 and you had 50,000 in expenses and you're left with 50,000 for yourself, you're gonna pay what it's called a self-employment tax of about, give it or take, 17%. If you have a partnership, if you have a partnership as an LLC, you're gonna get your K1, your partner is gonna get a K1, and you guys are gonna pay the self-employment tax because it's same considered as a sole proprietorship. When Avelino says, but some people say that it's better to do a corporation, it's better to do a C corporation. When you do a C corporation at a federal level, it's the only option. The C corporations are the ones Target, Inc. Corporations are meant to be for businesses that have multiple investors, multiple owners, and they need to file separate tax returns. For a small business, for somebody who's just starting out, the best way to file an Inc., a C corporation, is do what it's called a subchapter S with the IRS. The subchapter S means that you're telling the IRS that you're a small business and that you have less than 1,000 investors and you don't want to pay double tax. This means that you file your taxes in the corporate level, but the income flows to your personal tax return without self-employment tax. I'm going to say that one more time. I'm saying a lot of stuff that is complicated. But when you have a subchapter S company, you don't pay the self-employment tax because it flows as dividend income. Avelino, let's pretend that you do the LLC and you don't want to pay the self-employment tax. What you have to do is you have to file for a subchapter S. So you're treated as a small business and you pay income as dividend income and not self-employment income, which is a big difference on the tax rate. You can have an LLC and be a subchapter S. You can be an Inc. and be a subchapter S. But when you're an Inc., you must run payroll. You must run payroll. Inc. corporations that are Inc. INC pay double taxation. You pay taxes at the business level, and then you pay taxes again at the personal level, unless you file for the subchapter S. So that income gets transferred to your personal tax return, which is the 1040, without having to pay the self-employment tax.
So is there a minimum amount of payroll that you have to have, or can you just be one?
It has to be I can't think of the word right now, but it's gotta make common sense. So you cannot pay yourself like $5,000 a month a year. Like it's gonna be a reasonable. It has to be a reasonable amount that you pay in payroll. So
could that payroll be used as a tax deduction?
yes, that's a great question. So when you are running payroll, you're able to deduct the business expense of the payroll taxes. When you have a Schedule C, a Schedule C or a partnership, you don't get to deduct that self-employment tax that you're paying. You're not able to.
So I could pay myself a reasonable salary. And basically that money I pay myself just write off on the taxes.
If you are an LLC as a subchapter S, or if you're an Inc. as a subchapter S. What is the best? Every situation is different. So when you hear Avelino saying some partners, oh, it's better to do an Inc. Oh, it's better to do an LLC. Oh, it's better to do it like this. Just remember that each individual has a different situation and maybe they have multiple businesses. So the situation for somebody doesn't mean that it's gotta be your situation, because you gotta think about, if you're starting out, how much money you're making, what is the goal that you have with that business? Because when you're incorporating and when you're like actually doing your numbers to grow, the strategy that you're gonna use, it has to be the strategy that you're gonna pay the less taxes. But remember, it's gotta make common sense so you can apply for loans, or you can apply for more stuff in the future so you guys can grow. That's the whole point of being in business.
Mm-hmm.
Questions?
No. Lily has a question.
How do we go about continuing the courses?
What?
You're so beautiful.
What'd she say?
How do we go about continuing the courses? Is that what you said, Lily?
Oh, oh.
Yes.
You're too cute. Thank you. Thank you, beautiful. I'll let you guys know how we're gonna continue. So, Avelino, what are you going to do for yourself?
Well, it's because it's difficult because I'm thinking about the long term and I'm not really thinking about the now. Like, of course, it makes sense for me to do an LLC, um, and just keep it simple. But ultimately, I am gonna do other side jobs and other things, start.
I wanna tell you guys something about commercial real estate. Commercial real estate is the bomb. In the next few years, we're gonna have so much opportunities in commercial real estate. I have a client who has a daycare, and I was able to help her buy residential. Listen to me, guys. Residential real estate for the business with negative tax returns. How are we able to do that? If you own a business or if you start a business, when we're doing the calculations to apply for a loan, the bank looks at the gross income that the business is making. When you apply for a residential loan, the bank looks at your net income. Listen to me. Banks know that business owners make money. They know you're in business because you're making money. So they look at your gross income. The only thing here that's gonna be key is, how are you managing your accounting? You need to have control of your accounting, or where your expenses are going and how much net are you making per client. Like, how is your business making money? You need to know your numbers to be able to qualify and get advantage of all the commercial stuff that it's out there. Avelino, you have your LLC. You're gonna have your gross and you're gonna have your net. If you incorporate and you have the 2 years history of your tax return, you're able to start buying not just residential real estate, commercial real estate, because you have a 2-year history that you recorded, that you file your taxes, you have your company, you have your business account, you have your profit and loss, you have your balance sheet, you have all that shit that is like so complicated to deal with. But that's gonna help you have that history. I'm sorry for my French. You're gonna have what you need to be able to qualify for that. Don't wait until you're ready, and don't wait until you have the money. You guys have to start planning now.
So as a
And have
professional,
things organized, so when that time comes, you already have the history.
so as a financial professional, would you advise me to file as a LLC or a C?
LLC.
Why, Georgie?
Why? Yeah, why?
Well, my biggest thing was that, and if anything happens, it's not under your name, it's under your company's name.
Okay, so we gotta talk about liability, and that's not something that we're gonna talk about today. That's another topic. It's gonna be
Damn,
different.
chill out.
Thank you for bringing that up because liability is a big thing. Okay, so we're gonna bring that up.
Yes.
But just keep in mind, an LLC, it's not an entity that's recognized at a federal level. It's just at a state level. I just want you guys to be mindful of that. At the end of the day, you gotta choose who are
Period.
you going to be on the eyes on the IRS because the LLC is not recognized. It has beautiful benefits. It has a lot of flexibility. But like Avelino said, looking at the long term, what's going to make more sense?
So you're saying I should do a C corp?
I didn't say that.
Well,
Did
then
I?
what are you saying?
Chris,
I don't know.
You know, you said that
Okay.
the IFC doesn't get recognized by the IRS?
We need to look for the total income. So we need to look for the total income on how much you made and then go from there. Every situation is different. I'm just giving you guys just general information, but every situation is completely different. And the last thing that I want to say, everybody here, start thinking on how you can bring more value to the marketplace without trading time for money. If that's one thing that I want everybody to take away from today's class, how are you able to bring value to the marketplace without trading time for money? Once you figure it out, the answer to that question, I will be more than happy to guide you and show you how you can make it happen. What steps you have to do, like how can you make it happen? I can bring you the how. I just need you guys to have the idea. I just need you guys to come up with the idea on how you can bring more value without trading time for money, and I'll show you guys how. Okay. Ali, do you have it? I know it was very broad and it was like very general. My love, do you have any questions on the partnership? When it comes down to the deductions, it just gotta be business. It's gotta be business expense. It's gotta be from the business account. And as long as you categorize that expense with the overall business expense, you're gonna be completely fine. It gets messy when it's not really business. It was kind of personal. It came out from the personal account. That's when it gets messy. But as long as it's a business expense, you're able to deduct it.
What if we have receipts and upload the receipts to our business, like our QuickBooks?
And you're saying the receipts from personal, like stuff that you bought from your personal account, not from the business account?
Yeah, that was used for business. Like,
The first 3 years, we have kind of like a free pass with the IRS. So for the first 3 years that we have a business, it's okay because you're funding most of the business with your personal account or
Yeah.
your personal credit card. So just keep the receipts. You do it manually on the QuickBooks, and you should be completely fine. But again, you just gotta be able to explain and categorize what business expense was with
Yeah.
this personal purchase that was made.
Okay. Yeah, that sounds good. I did have a question. Do all LLCs qualify for the subchapter S?
That is a great question. That is a great question. And if you guys haven't done it, I need you guys to do it like now. So the subchapter S is a process that is done through the IRS and it takes 90 days.
Okay.
So if you guys want to take advantage of 2024, you got to send that application in like tomorrow because it's the middle of October already. So you can get the letter for next year. If you wait until next year to file to be a subchapter S, then you're not going to be able to use it for 2024. It's going to be until 2025, which means that you're going to use it until 2026 for 2025.
Okay. I'm glad I asked.
Yeah, so that application, and if you guys don't have it and need instructions, let me know and I can send you guys the form. It's very easy. Just fill it out. You ask them to be classified 2024. It can take, I don't think they will send it to you before December, but it's okay if you get it in January, as long as it was filed in 2024, so you could use it for 2024 taxes.
Okay, perfect. We'll look into that tomorrow.
Any
Awesome.
other-
Thank you so much.
Thank you for being here. I love it. And I want to hear from you any other questions that you guys have. Thank you so much for joining me. I'll hope to see everybody on the next class in November. And again, I know I'm talking a lot about taxes. This is like another stuff, but I am planting the seed because if we don't take care of what's important on the numbers, it's going to be very difficult to build a money machine, and you're just going to be working, and you're not accumulating anything. So thank you, everybody. Has a beautiful evening, and then I'll see you guys next month.
Thank you. Have a good night.
Good night. Bye, everyone. Thank you for joining. Bye.